Give us a sense of the supply chain. Where is it at right now? What direction do you see it going in the second half of the year?
So, Frank, what we're seeing from a demand perspective is demand is obviously slower this year than where it was last year. We saw the trough in terms of shipping demand be in the month of March, and things have slightly improved in both the month of April and the month of May. Now, when we look at our industry in less than truckload, shipment counts are down year on year in the high single digit, low double digit. Now, at XPO, the last published number we had was for the month of May, but our shipment count was up 2% on a year basis. But that's driven by us gaining market share and shipping more freight for our customers.
Mario, are the Fed minutes? The Fed minutes show the possibility of another hike, maybe even two more hikes. How does that impact your business for you and also for your customers? What are they telling you about this increased cost of capital?
Well, first, I mean, obviously, higher rates do dampen the overall demand environment, both from a consumer perspective as well as in the industrial economy. So it does slow down the economy as a whole. Now, we have seen overall, and obviously, these rates go up to counter the impact of cost inflation. Cost inflation in the month of May was the lowest it's been since the end of 2021. And in our industry, we typically counter cost inflation by having very strong pricing, given the less than truckload industry has effectively a small number of carriers that manage a lot of freight for customers. It's capacity constrained. What we're hearing from customer on the rate side, again, it's dampening demand in some cases, both retail and industrial, though behave differently based on these rates going up.
All right, so increased cost of capital puts some pressure on your business. What about recession concerns? A lot of people look at transports as a leading indicator of a possible recession. We just mentioned transports have actually outperformed over the last month. Do you believe, and what are you hearing from your customers about the potential for a big economic downturn? Are they preparing for that, or right now are they enjoying what seems to be a continuous wave of consumer spending?
Well, it's tough to tell what the back half is going to do from a macro economy perspective at this point. Now, what we're hearing from our customers, today, two-thirds of our customers are industrial companies, and one-third are consumer/retail type companies. On the industrial side, we typically look at the ISM index usually when it's below 50, it's a deflationary manufacturing environment, and it's been below 50 for roughly about 7 months. What our customers are saying, some of them, depending on the sector in the industrial economy, they are expecting a slightly better back half, while others are expecting a slower back half. But it's mixed signals on the industrial side. On the retail side, there is a different dynamic with inventory destocking. We usually interview or survey our customers on a quarterly basis where we get feedback from them. And more than two-thirds of our retail customers said that their inventory levels are where they wanted them to be. And that obviously leads to more shipping as you fulfill or replenish that inventory. For us within the company, we continue to invest in capital into the business to make sure we can capitalize on the freight markets recovering at some point.
All right, one other thing I have to ask you about, Mario, are labor issues. Yesterday, we saw UPS decline on concerns that their talks with the Teamsters are breaking down. We've seen some issues at the West Coast ports in both the U.S. and in Canada. What are you hearing from your customers when it comes to concerns about labor issues? Are they preparing for possible disruptions in the second half of the year? And if so, how?
Well, first, we wish them the best as they navigate these tough times. When I think about customers, usually any disruption in the supply chain leads to uneven flows of freight demand. So you won't have a consistent flow from customers as they ship goods through their supply chains. And usually, obviously, as a carrier, we're there to support them by investing more capital in our business. Just to give you an idea, Frank, this year we're going to add more than 6,000 new trailers to our fleet. And this enables us to service more customers and serve them more effectively over time as well.
Would any labor disruptions, especially on those West Coast ports, would that be a tailwind or a headwind for your business?
Well, on the short term, it would be a headwind whenever these disruptions are happening because you have less freight flow coming into the country. But at the same time, that would be followed by typically a high demand environment from customers where providing the capacity for customers become very important. So it's a combination of both, but disruptions usually mean that we need to partner closely with our customers, and we're usually there for them to support their business.